So I'm going to explain why compound interest is a scam, and it's a lucrative scam, and it's something that's kept people investing in a market that doesn't work. So I'll explain very quickly what compound interest is. Basically, it's you reinvest your interest and it keeps building up and it eventually snowballs. So you put in £1,000, let's say, into a bank account or the stock market, and you earn interest or you earn dividends. Yeah, you earn fees, whatever it is. You put it in, you start to collect, I don't know, £20 a month, for example, and you just keep reinvesting it, and you can put in 200 extra a month randomly, whatever you want. That goes on, and if you do it over a long enough period of time, you get an S curve of your money. So you might start off with 1,000, by year 20 you end up with 40,000, something like that. So this is the game where people say you don't even need much money, you just need time. So I'm going to explain why I fell into this trap many years ago. Like, I'm talking, when I discovered compound interest, I was like, I think Einstein calls it the seventh wonder of the world. I've never seen a direct quote, but that's what everyone says. Or the eighth wonder of the world, sorry. So I said, okay, if I actually do this, I got out a little calculator and I invested. And I said, okay, if I put this and I put £250 away, then I'll end up with X amount after year 20, I can retire. And that's the whole theory. So I was putting money in the stock market, and my business at the time started doing well. So I started putting some money across. I had a company account, etc. And I started to realize this ain't going to work. Number one, the inflation kills you. Yeah. So they say the stock market gives off, I don't know, 6%, 5%, 4% a year, historically averaged out, blah, blah, blah. So that's your dividends or your growth. So I said, okay, we're looking at the top of the stock market now. We ain't at the bottom. Everyone's calculating it from the bottom. This is the number one part of the scam. And I say scam because it's an accidental scam. And everyone's calculating it from historically, the last 40 years. Actually, in today's day and age, the stock market is maybe going up 5, 2, 3, 4%, something like that. So it's not really a position where you're like, okay, we're going to guarantee to make that. In fact, we're more likely to go down, I think, anyway. So the number one thing that people don't factor in when they look at compound interest is if you start putting your capital away, your money, no one ever calculates inflation. Inflation is like, if you look at the actual inflation, we're above 10% a year, clearly. At the moment, we're maybe 30, 40. It might get worse in the UK. Everything has doubled in price over the last few years. So we're more than, if we say safe bet, we're 10% earning. Yeah, so we're actually losing money, saving or compounding our money this way. And in theory, you can't sit there and say compound interest works. The other thing is, compound interest only does well if you do it on a short period of time. If you look over a long horizon, you're dead. You're finished. Number one, no one knows what's going to happen in the future. You could have used that money better. So there's pretty much 3 ways to get rich at the moment. You start your own business, invest in a business that does well, and invent something. Yeah. So bring a new product to market that fixes an issue, invent something. Yeah. Invest in something. So a business that booms, or you literally make a business that booms. There's only 3 ways. Getting rich, I don't know anyone in my life. I know people that got rich from property. I don't know any. I got people that have done well in business, investing. I don't know anyone that said, I compounded my money. I don't know anyone. I can't name anyone. So it's pure scam. It's pure like dreams. It's not going to work. It sounds really nice because you don't actually have to do any work. You just have to put a bit of money aside. Everyone thinks that's easy. I'll just put that aside and I'll just compound my money, etc. But it doesn't work like that. It won't work in theory. It sounds good on paper. It calculates on paper, but it doesn't work. This is only if you put big money on a short period of time, it's better. So you're better off starting a business, doing something, and then looking at it and saying, I've got 50 grand. So you skip to year 20 now. You've cut out many years. You haven't had to ride. Start on 50K, start on 200K. And you might think, oh, I don't have that money. I'm never going to have that money. Trust me, you will if you work for it. you end up saying, okay, I'm getting 2-3 grand. Your snowball is already down the hill. While everyone's making their snowball all the way at the top, they're still making their little snowball. You've gone, you're there. So that's probably the best plan. So skip it. It does work, but it's not going to work the way people say it is. Put your money in the stock market for 20 years. Bro, I ain't got 20 years, man. Like, I want money now. Do you know what I mean? Like, I need it in the next few years rather than 20 years. And it's good if you can find, the stock market's changed as well. I do a lot of investing now, more so than actual business. I moved from a business owner to investor now, more so. So I'm funneling assets over there. But the way I see it is, there used to be a bunch of companies you can buy. Now, you've only got to buy a few companies, like Tesla, Amazon, those kind of ones, Google. The smaller companies can't compete. Everything's a monopoly now. So the stock market's changing. Property, I hate. I'll never touch it. It's too much regs. And, you know, in theory, don't compound your money. Make money work for you, they say, but actually your money's just dissolving. It's disappearing. So, negative video. I love you all and take care.